Daily Fiscal Pulse for the 9th of April, 2026. Covering Thursday's trading session. These are final numbers, not intraday figures, so that's the baseline we're working with. Let's zoom out for a moment on what's driving market sentiment. The Iran and Middle East situation is the primary narrative right now. You're seeing it in headlines like Trump praises Palantir as stock has worst week in over a year and Iran conflict drags on. That's clearly moving price action. That said, flows tend to tell a more straightforward story than headlines do, and they shift more slowly. Turning to the fiscal picture, we saw a net transfer of $0.5 billion hit the system, with tax receipts doing the heavy lifting at $15.8 billion. At face value, there's nothing alarming about that. The E-mini S&P is showing some resilience despite what we're seeing in flows. ES futures ended the day at 6,862, staying above the 20-day moving average of 6,638. The 20-day trading range is about 516 points wide, so equities are holding their ground even with fiscal headwinds in place. Looking at the broader cadence, the 5-day average is sitting around $7.3 billion per day, which is pretty close to the $7.9 billion 20-day average. We're not seeing any acceleration or deceleration in liquidity reaching the market. Year-to-date fiscal spending is at $1,106.3 billion, which represents roughly 32% more than the comparable period last year. That's a substantial boost to the overall liquidity backdrop. Risk buyers need to acknowledge the fiscal drag that's working against them right now. The fiscal environment isn't exactly supportive. Our conditions gauge is reading -58. But history is instructive here. We've encountered similar dynamics before, and despite tighter liquidity conditions, the S&P has averaged around positive 0.9% over the following month. Markets don't follow liquidity in a straight line. They often grind upward regardless. What does matter is positioning. Leveraged funds continue to increase long bets, and margin debt is sitting at the 96th percentile. That's a level to watch. In historical context, readings that high tend to act more as a caution than a confirmation. Here's the asymmetry. Because fiscal flows are running lighter than they were a year ago, the liquidity buffer underneath markets is thinner. When sentiment turns positive, equities can still drift higher, but when a shock hits, like escalation in the Iran and Middle East conflict, the downside can accelerate, simply because there's less cash available to absorb the selling. Looking ahead, the 15th of April individual income tax deadline is on the calendar. It's the single largest reserve drain event of the entire year, and it will matter for near-term flow mechanics. So fiscal tightening is definitely showing up in the data, but the pace of that tightening might be stabilizing. What happens next really hinges on how those scheduled drains unfold. That's the picture heading into the next trading session.